Hi everybody, welcome to another update on the stock screener. Let me tell you about my retirement plan. Everyone needs to have a retirement plan. But before I talk about that, let's talk about compounding first. So there's a compounding effect and there is a certain formula for that. So let's say you have $1, and you are going to compound that $1 with, let's say, 30% dividend per year. So that's 100% plus 30%. And then there's this formula where you can do the power of, for example, 10 years. And that will be the compounding effect of that $1, where you get 30% dividends per year for 10 years. So that is our formula. And as you can see here, that $1 turns into $13. So you can actually 10x your money if you can find a dividend stock that pays you 30% per year. Okay, that's a very easy way to retire if you have enough initial capital. So I have this nice sheet here where I started with an initial capital. Let's say we have $100,000. The income is the dividend of that initial capital per year. I added some expenses here. So the expense is this number per month, for example. And I also added an inflation component to that per year. So each year those expenses probably go up due to inflation. And then we have the end balance sheet where you have the initial capital plus income minus expense. And then we do the same for the next year and the next year. And then we get this nice chart to the right. So as you can see, if I have a stock that pays 10% dividend and I started $100,000 with expenses of $1,400 per month, then you can easily see that I will not survive because I will go bankrupt. So that's why I need to have a job, right? I could cut my expenses to 800, for example, then I could survive with that 10% dividend, right? But 800 is probably not enough. Also, there is inflation. They say it's 5%, but yeah, let's take 6%. And you can see that we cannot survive with 10% dividend. So let's up the dividend to 20%. Let's see what happens. Still, I can't survive. 25%. Okay, then everything changes. So if you can find a stock with 25% dividend, with inflation of 6%, initial capital 100,000 and some expenses, then you can survive. So this is the amount of money that is going up. And in 10 years, you have double the money. Okay? If you can find such stock. Let's say 30%, then it goes up even faster. You can actually even 10x your money in 10 years, right? 100,000 goes to 1 million. So that's a 10x of your money if you have a dividend stock of 30% with inflation of 6%. Okay, so that's very good. This looks like a very nice scenario. So do we have a dividend stock with 30%? Can you find one? Well, look no further. We have a dividend stock of 30% right here. That's Soma Gold. I expect this company to earn 25 million per year, at least in the coming years. And as they grow, this can turn to 50 million at some point per year. And that's because they are going to increase production probably from 2027, 28. It will go to 100,000 production, and that will be 50 million net income per year. But let's say we stick to the 25 million for the moment per year. We know that the market cap of this company is 50 million currently. So 25 million is half of that. So if you have a 50 million market cap and 25 million net income, that means that this company could send out 50% dividends, right? Because that's half of it. So you get 50% dividend if they return all the cash. Of course, in the first 2 years, they need to pay off debt, so that's probably not possible. But after 2 years, the dividend could start. And this is after capex, after taxes, after interest payments, and after production costs. So that's real free cash flow that's possible. So 50% dividend, probably you need to pay some taxes, and then you will get your 30% dividend per year. So this scenario, 10x your money, is very possible when you buy Soma Gold. Okay. Now, there's also a dream scenario. 30% is not enough. Let's say there's a stock with 200% dividend. Does such stock exist? 200% dividend. Well, look no further. Such stocks do exist, and that is Trigon Metals. Because here, when you look at the NPV cash flow model, at some point they will produce 60 million pounds of copper at a very low cost of 1.5. Copper could go to $5, but I took 4.5. And the net income is going to be at 100 million, as you can see here. What is the market cap today? Only 45 million. So that's almost 3 times the market cap. So the earnings are 3 times the market cap. That means we should have 200% dividend to 300% dividend. If you take some taxes on that, then it's 200% dividend. So what happens when you buy this stock? So in a few years, they could start paying the dividend, which is 200% if you buy the stock today. And then your initial capital could rise already, as you can see, at 10x in just 2 years. And then it will go to 2 million. That's a 20x, and 7 million, which is 70x. If you keep compounding all that money and add 200% on that money per year and keep reinvesting that, then you can quickly go to a multi-millionaire, right? The problem is you cannot keep investing this money in Trigon Metals because the market cap of Trigon Metals is only going to be, let's say, 100 to 200, 300 million, and your money is already at 22 million. So you would push up the stock price quite a lot with all of this money. So that's not possible. So at some point it will stop and you will need to find another company to get dividends. Find another stock with 200% dividend or 30%, like Soma Gold. So just think about this. Think about the compounding effect. Think about how much dividend the stock will give you. And you can actually calculate how much expenses you can afford. Let's say my expenses go to 5,000, then this is not going to work. 5,000 is too high, even for a 30% dividend. So you need to make sure that your expenses are not too high. And you can easily calculate this with this Excel sheet. So, of course, you also need initial capital. If you don't have initial capital, that's a problem. Let's say you only have 20,000 of cash, then this is not going to work, this 30% dividend technique. So you need to save some initial capital to start compounding. And that's important. Savings are important. Initial capital is important. Otherwise, you will keep working. So I think 100,000 should be enough to get you started with 30% dividend. If you have 20%, that's not enough. Unless you cut your expenses to 1,000, and then it would work again. So play with this yourself, create this retirement plan, and see how you can increase your net worth. So good luck, and I'll see you in the next video.